Hey everybody, Happy New Year! Today is January 1st, 2020. I'm just taking a really quick look and review of the S&P 500 as we get ready to start the first trading day of the new year and the new decade. Okay, here is our roadmap. To our roadmap, I've added a bull fork. I won't get into the details of what the plotting points on it are or whatever, but it was pretty interesting that when I put this down, this is the median line of it right here, and you can see that our December all-time high here was a little look above the median line and fall back over. And that's exactly what we're looking for if we've gotten some good plot points put down on a fork. And I haven't shown a lot of these to you guys because these really work best when you're right at the top of a move or at the very bottom of a move. And if we are at the top of a move, this median line can sort of guide us through. And once price really makes a hard break away from it, we'll probably be targeting the bottom of that fork eventually for support. And the point difference from the median line to the bottom of this particular fork is 170 points. So that's going to be a pretty good and satisfying correction when the time comes. So this is something I'll be monitoring and I'll keep you informed about. Anyway, back to the roadmap. Here was our ridiculous rally that we ended the day on Tuesday, the 31st. Exactly the opposite of what I said and told you guys was going to be coming. Because and I guess maybe the explanation I can give is that maybe we got 2 days of selling front-loaded into it, and instead we got a good short covering rally. I thought that we would get this kind of a move on the day after we get back. This is usually what happens. We usually have an awful day like this on the 31st and then a day like this where we recover and come charging back on the first day of trading in the new year when nothing bad has happened over the course of the holiday. If there hasn't been any kind of a geopolitical event or any kind of a big geopolitical threat or anything, usually it's just all bought back up and we begin those final days of the Santa rally and kind of fizzle out about a couple of days into the new year and finally make a little bit of a back test down. So we'll see how that all plays out. If we continue this up as we get back for a couple of days, what we can start looking at now are taking our closing level for 2019, which is 32.30.78. You can call it 32.31 if you want, just to make it easier on yourself with a calculator. And we can start looking at percentage moves up from there. And a simple 1% move up from where we closed the year would get us up to 32.63. We still have an unresolved high from ES that would get us with the spread to probably about 32.53, 32.52 or so on the S&P once that resolves. And if we keep on going and taking a look above that, maybe this 32.63 for a nice clean 1% gain on the new year is where we're going to be targeting. And that also kind of rhymes with the 80 handle rule as well. You know what I'm talking about if you've read that blog article. So I'm thinking that maybe if we are going to charge out of the gate and make another fresh new all-time high, maybe this is going to be the target and where we sort of peter out and fall back from. If we continue on through, we've got more targets we could look at, and we can also take this entire move here that we made from the all-time high on December 27th to the low that we made on December 31st. We could take it and double it up, and that would get us to 32.84. Again, a nice run with the 80 handle rule. Or we could kind of fail to make a new all-time high, fail to resolve this ES high, and roll over and sell off down for a double down of the move instead. And that would get us down to about 31.76 for a move down through the 10-day and the 20-day, filling this gap in the rest of the way and getting ourselves well into this next gap, and maybe we would reverse from there and continue up. So those are some ideas to the upside and to the downside that you can sort of look towards, or just stick with me, look at the map, read the tweets, and you'll understand better what I'm talking about by listening to these videos and reading the blog articles. This is a backed out, cleaned out version of the S&P 500, looking at the last few years of progress that we've made. Here was 2018, the awful Q4 sell-off down to this huge low, and then the really incredible move that we've made ever since. Our absolute high for 2019 was that 32.47 that we made on December 27th, and our low was actually made on the second trading day into the new year. I was starting to wonder when I looked at this, what if we make our absolute high for the year 2 days in and all we do is sell off from there? So that's a thought. But don't get too excited about that because chances are we're just going to keep on grinding higher and higher, maybe until January 15th when that phase one trade deal actually gets signed. And as we look ahead into the first batch of earnings, maybe that's where things will peter out and we fall back. So I wouldn't get your hopes up too high that we'll put our high for the year in two days in and then fizzle back doing a polar opposite of what happened in 2019. But it's just a thought that came to mind. Anyway, our halfway back point for the entire year for 2019 is 28.45.95. I think that'll become a target that we will look towards as the year goes on once we do get a good correction going. And as we start to fall back, obviously we're still looking to test 30.28, which was this July Q3 all-time high. And if that doesn't hold us in a correction, then we would be looking towards our 200-day simple moving average and maybe looking to backtest this 29.40 level, which was the 2018 high. And you can look to the left on the chart here and see how really doubled up from there. And you broke out, got to that 30.28 and then fell back down through it, tried to break out again, fell back down through it, and then rallied up. So I think that these will be good targets that we can use. So if our correction does not get sustained at 30.28, maybe it's going to be about 29.40. And if worse comes to worse, maybe we're going to need to backtest 50% of all the progress we made in 2019 by hitting 28.45. Okay? And once again, just to review one more time, this fork, like I said, this bull fork that I've put on the chart and that I'll keep track of, and you'll hear me talking about it. And once you've listened to this video, you'll know that it's there and it's something being introduced into the conversation. You can see where this falls in line right now. If we were to start correcting, it in the next couple of weeks, right now holding the bottom of this fork would mean testing down to about would be testing above the December low and holding that and bouncing back. So we would end up having to break down through the bottom of this fork in order just to get to 30.28. So if this 30.28 is not something that's doable yet at this point, if the market isn't ready to correct that deeply, and all we do is test and hold above the December low of 30.70, this fork might have something to do with it. It might simply just be that we're coming down to test that. Okay, I don't want to get up, but the last thing I'm going to stop with is just looking at this list of targets that I started posting in October. I keep reposting it, not to toot my own horn about how I've called all these targets. I keep reposting it so that you'll, in hopes that you will read it and you'll understand how you can go ahead and you can figure this out for yourself in the future. Because sooner or later, you're going to want to just drift out on your own and learn this stuff and fly on your own steam and understand how to figure this stuff out. And simple things like taking a major low that we make in a correction where we break down through all the simple moving averages, reverse and regain something really important like a 50-day simple moving average. Taking that range and doubling up is often a great target to look for. Or, another moving average like for us, was the 20-day. This was at the top of our stack of broken simple moving averages when we came out of the low in Q4, and we were working our way towards that first meeting on the phase one trade deal. We gapped up open over the 20-day simple moving average on that day that it was announced. So taking the distance from that low to where that 20-day simple moving average was that day and doubling it up gave us a good target to shoot at as well. So different things. You can read through this list and just sort of learn it for yourself and keep it in mind the next time a big correction comes around or a big high comes around, and we can start looking for and halfway backs and so forth from those major highs. And finally, at the bottom of the list, this is brand new since we have a new 2019 at 32.30.78. Again, if you want to use 32.31, maybe as the weeks go on, I'll get sick of typing this all out and just call it 32.31 as well. But simple percentages on this point would get us to 32.63, 32.79, and if we got a full 2%, maybe 32.95, taking a shot against 3,300. And then I just sort of like dot it out because you know what happens when we get to a new big round number like 3,300. We would probably screw around for a couple of weeks just trying to get above that level. And once we did, we'd probably just keep on going. And so a full 5% on the new year would get us to 33.92 for a shot against 3,400. A 7.5% would get us to 34.73, and a full 10% on the new year would get us to 35.54. Pretty interesting. Anyway, that's it. Happy New Year. Have a great rest of your Wednesday, and I'll see you tomorrow.